Good morning, traders. It is Wednesday, the 18th of February, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown of the news here. Bank of Japan announced yesterday its monetary base was left unchanged at 80 trillion yen, is expected. Sees no need to further stimulus at this time. Markets wait for definitive details on Greece request for loan extension. ECB likely to maintain its emergency liquidity assistance, ELA, for Greece's bank sector for now. I have more on Greece in a minute. UK jobless claims change. Jobless claims change and wage data continues its string of improvement and exceeds expectations. So UK is on the upswing again, as it was in the fall of last year. The German finance minister spokesman Jaeger said the Eurogroup has not scheduled another meeting on Greece at this time. It's interesting because France's finance minister Sapin says he expects an agreement on Greece this week. So there's this, not sure if it's political play since these guys are supposed to be economists, but they are politicians after all. There's some back and forth on what's going on. Greece submitted its loan extension request. Is to submit its loan extension request on Thursday, tomorrow. Greece's new PM, Tsipras, reiterated view that currently in the middle of tough negotiations, government submitted proposals to find a solution, but he didn't provide any details. The Greece government spokesperson confirmed government to submit requests for loan extension today instead, which I think it actually went in about an hour ago. And so it goes on and on and on. Germany's taking a hard stance on this still, and it's driving the trade currently. So the ECB non-monetary meeting is also today. Policymakers are to discuss whether to pull the ELA funding from Greek banks or not. So there's a lot of news flow, and it's important to have some way to get that news flow as it does affect how we trade. MBA mortgage applications week ending February 13th came in at negative 13.2 versus negative 9% prior. January U.S. PPI final demand month on month came in at negative 0.8% versus negative 0.4%. So worse than expected. January housing starts 1.065 million versus 1.070 million. Building permits 1.05 million versus 1.067 million, also worse than expected. And the S&P fair value today is at negative 3.6. As far as what we have on deck, in about 10 minutes, we have the industrial production release, expecting 0.3%. Cap utilization at 79.9%. Manufacturing production year on year at 0.4%. These are all a low tier number. At 10:30, we have a Treasury to sell its its 4-week bills. At 11 Central, we have German Chancellor Merkel at a CDU event. She might make a statement about Greece. Also, at the same time, German Finance Minister Schäuble at Berlin conference. And then at 1 o'clock Central, we have the FOMC minutes. We need to pay attention to that. And then, of course, right after the pit close, it's at 3:30 Central, weekly API oil inventories. The crude oil inventories will be released tomorrow because of the holiday on Monday. At 4 o'clock Central, we have Fed's Powell again on regulation. And then at 5:50 p.m. Central, 6:50 Eastern, Japan's January trade balance. If you're trading the any yen pair, this may affect you. Japan January trade balance is expected to come out, including exports and imports. Again, for tomorrow, We're expecting the ECB January meeting minutes, initial and continuing claims, Philly Fed leading index, EIA nat gas, and crude oil. And then on Friday, we have Eurozone PMI and then US manufacturing PMI as well. Let's switch gears here and look at what we've done and what the technical picture looks like. This is yesterday's action right here. Market did just what was expected. Let me switch over to day session only. Hyper 1 played out almost perfectly. We had a choppy open auction in range. Market went right to the value high at 91.50 and then pulled right back to the point of control, went right to value low. So you can see this gray area versus the blue area. The gray area is value, and I said that this was balanced before it broke out in the on the close. So you can see that the market tested value high to value low, textbook style to the tick, and continued to be in balance. But the primary hypo, excuse me one second, the primary hypo was for chop, for the market to pull back into this area, and then the expectation is for it to break to new highs based on several factors. 2087 was the over underline based on the overnight session, and it went to 86 quarter, and then it finally turned around and made that new high and pushed to 98.75. I did post on Twitter that the next target up is 2103 and a quarter, and that's still on deck. So overall, yesterday's profile left us with a pretty ugly double distribution style profile with a cutoff initially at the IB high, area, but the cutoff moved up into this 93 even 93 quarter area between the two distributions. We're currently trading right under that upper distribution. The expectation this morning, if we look at the overnight session, we see that a lot of the selling came in after the numbers that came out this morning, PPI, housing, and all that, and it's really pushing those lows now. We're back at yesterday's opening swing high. So to me, it looks like the market's shaping up to be imbalanced today. I wouldn't expect too much today until the FOMC minutes. So this morning, again, we're up against new all-time highs. The overnight session did not make a higher high, did not continue this formation. We would expect an impulsive formation to have a pullback like it did, and then for it to make a higher high, or at least an equal high to 98.75, and it did not. It went to 98.50 before selling came in. And so the overall profile overnight is balanced, and it's moving away from the close and from the point of control. So the way this looks to me is it's likely to be a very choppy and turbulent day. Probably maintaining that composure until we have the FOMC minutes at 1 o'clock Central. So this morning, I would exercise some real caution on being aggressive with trades. I would first, again, as usual, determine who's likely to be in control, and then wait for somebody to step in and dominate, and then take trades from that direction, take pullbacks or whatever from that direction, as opposed to stepping in on new all-time highs in a balanced environment as we have this morning. The initial push is expected to be new lows. There's going to be, we have 20 minutes to the open. This may pop up, but I expect that the market's likely to have a responsive buy push early on towards that 2096.75 and towards the close. So we'll see if that happens, but we have a decent range from yesterday for an update, 12.5 points. and it's likely to be stuck in there. Overall, by the end of the day, there's some evidence supporting lower by the end of the day than higher. The expectation here is that this high at 98.75 might be here for the day, and is likely to stick throughout the session. The probability is only better than just slightly better than 50%, maybe 60-40 or whatever. But when I look historically at this type of setup, it supports the idea that it's not likely to take out this high during the session, and the market's likely to rotate down and test or look for buyers at lower prices. We have 2 days of balance here. The 2 days overlap, so I've put in a micro composite. You can see it here in yellow. In fact, yellow is not a good color right now. Too many yellow things. Let's make it red. So you can see here there's an upper distribution, there's a middle distribution, and there's a very large lower distribution. We are in this very large lower distribution and have room to 88.50 where the point of control is for these 2 days. The beautiful thing about microcomposites is that even though when you look at this profile from last Friday, and it looks like it's not as deep as the profile from yesterday, because of the way the profiles are drawn. They try to fill the space as much as possible. When you put a micro composite on, it shows you where the volume dominates, regardless of how they look on the screen. Once you put on a micro composite, it shows you really where the volume is, where acceptance is. So today, the key areas to watch are 93.25. Do we stay below or do we get over? If we get over 93.25, then you're looking at the point of control 96.75 to be tested and potentially new highs. But as long as 93.25 gets tested and the market's not able to sustain prices above, then you're likely to get to 88.50. I expect the market to push the overnight low much more than the overnight high to fulfill the overnight stat. Okay, that's it for the ES. Let's look at the Euro Stoxx real quick. So overall, this market has basically been in balance for quite some time, since the last week of January, and it broke out higher, has pulled all the way back into the balance zone, and has formed new balance. So yesterday, new balance here with a point of control, with a temporary point of control at 34.50. This market's trading on the upper side of that balance. This is a P-shaped profile, so it's a short covering, likely to be short covering that is more active. So buyers are covering shorts more likely than they are getting long, it looks like, based on this. But I'm still looking for 35.53 for a test. The volume in the zone that we're in all the way up there is very, very low. This is a CLVN zone in this product. So this product is likely to keep creeping up as it waits for news. This morning, very balanced, very tough trade, very tight trade. So keep your bearings straight and keep your risk under control. Don't get carried away. And then finally, crude oil. So this thing's been has been very interesting. The last week on the 3rd, we made this high at 54.25. We gapped down and sold back off into the micro composite that was here previously, and I stated at the time that this market's likely to linger between 49 and 47. And that 54.25 is likely to stay for at least a week. You can go back to YouTube and look at those videos, and it has. But it's been a pretty crazy swings here. The formation that was created based on yesterday's action is very bullish. This is a W formation at the peak and out of balance. So this is basically working in an area that has low volume and is balancing higher. I'd expect at this point based on yesterday's action, although yesterday's action went and tested 51.05 very beautifully, and it was starting to make its way down to 49. The way it turned yesterday and the way it closed, this is a W formation breakout. We're likely to see higher prices, so be cautious if you are short. Target up top is 56.77. Brent's over $60. And it looks like there's some news that still has not, that's still being priced into crude oil. I don't know if it's a supply side issue or ISIS or whatever, but crude oil is definitely likely to bounce up short term, more so than push lower. So be cautious if you have a bearish skew on that product. I'll leave you with that. Good luck, and I'll catch you tomorrow.